We're now going to look at adjustments and how they relate to a trust reconciliation. So what is an adjustment? An adjustment is a transaction that can be posted to the trust account to show either a negative or a positive entry. So for example, a client may come into the office and they pay an invoice with cash and it's the last day of the month. So we receipt that cash into Actionstep, but it's not banked and doesn't appear on the bank statement until the following day. So when I'm doing that month-end reconciliation, I can see in my Actionstep transaction that there has been a deposit. However, that deposit doesn't show in my bank account statement. So what we do there, we don't change the deposit in Actionstep because it is the date that we received the cash. What we do is we do an adjustment, and that adjustment shows that we're waiting for that cash to appear on our bank statement. There are different kinds of adjustments. So we have unpresented checks, which is where you've sent a client a check, but they've not yet cashed it. So that money has not left the trust bank account, but we have made an allowance for it in our Actionstep system. And also an outstanding deposit, which is the same as the example I described above. We also have another one, other, which you can use in limited circumstances where it does not fit the other two. I'm now going to show you how to do this adjustment while you're doing your reconciliation in Actionstep. So we go to New Reconciliation, and I'm doing a reconciliation for the 31st of December. Again, it's a manual process. And my bank account statement, the closing balance is 80,000 as at that date. I then hit save. We then go through all of our transactions and mark them off. Now this one was a reversal, so it doesn't appear on my bank statement. That's fine, it reverses itself out. Now this one here, this deposit of 500, does not appear on my bank statement, so I'm not going to reconcile that. And I'm going to say fully matched for the ones that I have on my bank account statement. So this means that this item here, this deposit, wasn't reconciled, and I need to say why. So I give it a category, and it's an outstanding deposit, and that's because the cash deposit does not appear on the bank statement. So once I've added in my adjustment, I can then go save and next. And now my account reconciles because I've done that outstanding deposit. So I can complete that reconciliation. Now what happens when we do that is if we go back to our list, we can see that that has been reconciled. And if I go to do a new reconciliation after that date, and we make it for the 19th of January, and our 500 has now appeared in our bank statement, you will see that we still need to match that outstanding adjustment. So that these adjustments will always come through to the next reconciliation, where you can then complete when that cash has come in or when that check's been cashed.